First up, though, it's the end of the oil glut as we know it. Since 2014, the price of oil has slumped by more than half as supply exceeded demand. After months of wrangling, a deal has been done among producers from the OPEC cartel and countries like Russia that will see production fall for the first time since 2008. The International Energy Agency says if the planned cuts are implemented, the oversupply in the market will dry up within 6 months.
Our agreement is really stemmed from the sense of responsibility towards the balancing of the market, which will lead to positive results, not only for producers and exporters, but also to consumers and to the healthy economy we all require to the world.
Well, to talk about what's next for the oil market, I'm joined from London by Richard Mallinson, a partner at the research consultancy Energy Aspects. Richard, thanks for joining us. Can I start by asking you, the International Energy Agency says the oil glut with this deal is over. Do you agree?
I think it is. I think what we now see with the combination of OPEC cuts and non-OPEC producers cutting is from the beginning of next year, oil markets are going to be in a deficit, meaning we're drawing oil out of inventories rather than putting more oil into inventories which are already very full.
So what does that mean for prices?
Well, it doesn't mean that prices are going to shoot up immediately, because we do have a lot of oil still in stockpiles, and that's going to be drawn down over a period of time. But I think we're going to see oil prices above $60 a barrel in the first half of next year, and likely above $70 a barrel by the end of next year.
And from a consumer point of view, how fast is that going to filter into what prices people are paying for aeroplane tickets or for fuel for their cars?
We are going to see that coming through to the prices consumers pay relatively quickly. Although there's a few weeks of lag as oil moves through the refining system and is distributed, the reality is that those prices will move upwards relatively quickly. And the other factor to consider here in Europe is, with the dollar so strong, international oil prices are set in dollars, and so we will see, and we're already seeing, the effects of a strong dollar compared to the pound, compared to the euro, on the prices that we pay at the pumps or for tickets.
Now, the International Energy Agency also warned that, this was only going to cut the glut if suppliers stuck to their planned cuts. How likely is it, do you think, that the oil producers will stick by this agreement?
Well, it's a really good point, because the past record of the OPEC group hasn't been perfect in terms of compliance with those cuts. There are some members, Saudi Arabia and its neighbours in the Gulf Cooperation Council, that I expect to fully comply with the commitments they've made, and that's the bulk of the cut that's been promised. There are other countries like Iraq where I don't think we're going to see the same level of compliance, but even adjusting for the assumption that some countries cheat or don't follow through on their commitments, we still see the oil market rebalancing in the first half of next year.
How important is Russia's involvement in this agreement?
I think Russia's involvement has been really important on two levels. The first is political. We have come to understand there was a lot of very high-level diplomacy to get the deal across the line. So the Saudis had disputes with the Iraqis and the Iranians, and I think Russia played a key role in particular in bringing Iran to the table and securing a compromise that worked. But I think it's also important that Russia is making a commitment of its own to limit production. Russia has been growing its output quite fast this year. The market was expecting that to continue next year, but now we've been promised that Russian output will be marginally reduced and then held flat. So that adds to the effect of what OPEC can do in terms of cutting its own production.
What about those American and Canadian producers? If they're going to see OPEC and others cutting supplies, are we going to see them ramping up their production?
Yes, I certainly think that US shale producers are going to accelerate activity. The key level for them has always been a price around $50 to $55 a barrel for WTI. We're in that range already, and the outlook for next year is that we'll move higher up. In Canada, we're seeing one or two projects starting to be reactivated, but the main benefit that Canada is going to feel next year is projects authorised and started years ago when oil prices were $100 a barrel, but on a very long build time, so they're only coming online this year, next year. In terms of new Canadian projects, I think the outlook's much more limited because costs are still high there, and the uncertainty about whether those big-scale investments would pay back over their lifetime has really increased as a result of the crash in prices since 2014.
OK, Richard Mallinson from Energy Aspects, thank you very much for your analysis. Now, next to a scandal that's cost South Korea's biggest company billions. In October, Samsung was forced to recall almost 2.5 million of its Galaxy Note 7 smartphones after reports of several models catching fire. Aside from the cost of replacing the phones, the issues dragged the company's name into the mud. But in its home market of South Korea, Galaxy models are still the top-selling smartphones. So, how has the scandal been viewed by South Koreans? Our correspondents sent this report from Seoul.
2 weeks ago, Jae Ho-sung exchanged his Samsung Galaxy Note 7 for a different Samsung model. Like many other Note 7 users, he was worried about his phone's batteries igniting. But that doesn't mean he abandoned Samsung.
Although the explosions damaged Samsung's reputation and made me nervous like other customers, I'm convinced that Samsung will address the problem and could still grow as a company in the future. I intend to buy a Galaxy 8 or Galaxy Note 8 when they go on sale.
Sung is one of many South Koreans who still swear by Samsung products, despite the Note 7 fiasco. For the 6th year in a row, Galaxies were the top-selling smartphones here. More than 60% of mobile phones sold in this shop are made by Samsung.
People still want to buy Samsung phones. Samsung is a strong brand, and people believe that Samsung, much like iPhone, stands for quality.
Samsung is much more than a smartphone maker, of course. The company accounts for 17% of South Korea's GDP, leading some to jokingly label the country the Republic of Samsung. Its ubiquity means that it will withstand the damage to its reputation caused by the Note 7 recall, according to this analyst.
Even though we predict that Samsung would suffer losses between 4 and 5 billion euros for its third and fourth quarters from the Note 7 debacle, these losses will not be significant because it is still bringing in profits in other areas.
Samsung was recently given cause for optimism elsewhere. It won the latest round of its long-running legal battle with Apple in the United States. The Supreme Court ruled that Samsung shouldn't have to pay a penalty of over 300 million euros to its U.S. rival for copying key iPhone designs, and ordered the amount of damages be recalculated.
Samsung's troubles aren't the only concern for the South Korean economy, though. Kate Moody's here with more. Kate.
Stephen, the country is in the midst of political upheaval, with President Park being impeached over a corruption scandal. Apart from Samsung's problems, there's been an embezzlement probe at the Lot Group, a family-run conglomerate which deals in everything from hotels to chemical refineries. The world's 7th largest shipping line, Hanjin, filed for bankruptcy in August, leaving Korean container ships stranded across the globe. So with all those potential pitfalls, what state is South Korea's economy currently in? GDP growth has been slowing slightly, hovering below 1% throughout the year. Exports fell more than 3% in October, while industrial production dropped 2%. The average household holds more debt than its income, and youth unemployment has hit an all-time high while the population continues to age. Now, despite those warning signs, the finance minister, who's staying on from the previous government, has vowed to keep the economy strong and stable. That means pushing ahead with economic reforms, which are aimed at boosting growth and cutting ties between business leaders and politicians. That would also go some way towards restoring confidence in the country's business giants. The stock market has been fairly resilient. The Kospi is up 4% for the year. Regional investors are somewhat used to political and financial scandals. In 2004, when the then president was impeached, the stock market dropped about 5%, but took less than a month to recover in full. How long this power vacuum lasts could be crucial in determining how much damage will be done. As is often the case, the future of politics and the economy are likely to go hand in hand. Stephen?
Kate, thank you very much for that. Next to Russia and the rebirth of a former industrial city thanks to a recession. In the Soviet Union, Voronezh was a hub for building aeroplanes. Now it's become home to a mini tech boom as the collapse in the value of the ruble has made it an attractive destination for software and IT services startups. Brian Quinn has the story.
Voronezh, Russia. Once a Soviet industrial hub, its manufacturing sector is now in decline. There is a bright spot amidst the rust, a burgeoning tech sector, spurred on in part by low office rents and local tech-focused universities.
Voronezh is located close to Moscow, and there's an opportunity to rent big office space. Other cities don't have that much land available.
But there's another force at work, Russia's general economic malaise. International sanctions and a plunge in oil prices have brought 2 years of recession and the loss of half the ruble's value. That's made Russian tech workers much cheaper for foreign companies, enabling software developers to compete with traditional outsourcing destinations like India and China.
We produce games for the former Soviet countries, but we also make versions for Europe and the US, which brings us revenue in foreign currency. Thanks to the exchange rate, this revenue is even bigger in rubles, which helps.
Many local startups eventually leave Russia in search of greater investment potential and legal protection. But with tech salaries here roughly 8 times the local average, plenty are loath to leave.
If I move abroad, I will find myself with a fairly small salary by European standards. I'll have to climb up the career ladder again, so I don't feel I need to give it all up and leave.
Russian IT service and software exports have been on the rise since 2010. One estimate valuing them at 7 billion euros in 2015.
That's it for this People in Profit. If you have any comments on the stories that we've been covering, get in touch on Facebook at France 24 Business, or you can tweet me at NewStephen. Until next time, thanks for watching.
I'm Jessica Le Mazurier. I am France 24's New York and United Nations correspondent. You can find my live coverage and reports on France 24's news programs and on France24.com.
Jessica Le Mazurier, one of the 160 France 24 correspondents around the world.